All right. This is our beginning of our panel discussion. We've got 50 minutes. I've got 3 excellent panelists with me today. What they have to say is very important. I'm Linda Williams with the U.S. Small Business Administration. We no longer lend directly unless it's in the case of a disaster, a declared disaster. But we do what we do through our lending partners, and we really reach out to the community through our resource partners. And I've got some of each up here today. 70% of small business owners never ever get in front of a lender. And it's not surprising that the leading cause that a small business will fail, especially early on, is that they lack funding. So today, I know of at least 2 lenders that are here, and I know that there's more in our audience. And this is a good time to listen to what they have to say. And if you have a question, we'll open to questions possibly at the end, but they're going to be here through the event, and they have either an exhibit table or they've got materials at the SBA table. I do want to say that SBA, the loan program, this is one of the most active lending areas in the country. We usually are number 4 or 5 in the number of SBA loans, dollar-wise and number-wise, in the country. In the first 9 months of our fiscal year, which ended July the 1st, we approved our lenders approved $862,619,000 in SBA guarantee loans. It was 1,186 loans, and 16,638 jobs were saved. Our average loan size is a little bit larger than in some areas. It's $800,000. I'm sure you're sitting out there going, $800,000, I could use that. It's a little deceiving. For the smaller loans is where you're probably going to start. Those can be harder to get than the larger loans, actually, for a number of reasons. But I'll let our lenders talk about that. And what I'd like to do is ask our panelists to introduce themselves. So I'll start with you, Patrick. You may need to turn your mic on.
Awesome. Well, thank you, Linda. But before I introduce myself, let me if you guys would do me a favor, look at the person next to you and say, "It's a great day to be alive." All right, one more time. Look at him and say, "It's a great day to be an American." Awesome. Well, the reason you can say that is because of me and other folks like me. My name is Patrick Alcorn. I am the founder of the Business Beyond the Battlefield Conference and the senior director for the Veterans Business Outreach Center. I spent 9 years in the military, Corps of Engineers. I got to build some bridges and blow them up and so forth. And my office helps veterans, military spouses, and all military-connected entrepreneurs in Texas, Oklahoma, Arkansas, and Nevada start, build, and grow their businesses.
Good morning. I'm going to take that a step further. It's a great day to be in Arlington, Texas. So, I'm Mike Gerro. I'm a 37-year banker. I've been with Frost Bank for 22 years. Of my 37 years in banking, 30 has been with a focus on helping small businesses grow and working with small businesses. So I'm located here in Arlington, Texas. I work primarily on the east side of Tarrant County in Arlington and Mansfield, though we do travel outside of our local area. But again, I focus on working with small businesses to be their trusted advisor and help them grow.
Testing, yeah. Good morning, guys. My name is Chris Smith. I'm the Regional Lending Manager for PeopleFund, and PeopleFund is what we call a community development financial institution. So we're a non-bank small business lender. I've been in small business banking about 20 years. I started working in retail banking, and I kept finding that no matter what my boss or everybody else around me wanted to do for that next step in the career, I was gravitated back towards these people that kept coming into the bank with deposit bags, and they looked like they were frantic but energetic, and I was like, these people are interesting. And turns out that I just had that passion to hang out with and help small business owners and help see them grow, and I've been able to do that for the last 20 years in a lot of different capacities. So excited to be here today. I'm a native of Arlington. I love what we're doing here, and I was talking to my family in Philadelphia last night, and I was telling them about what the Governor's Summit Series is about, and they thought it was super. So I think we're blessed to have things like this because not everybody everywhere is doing it. So embrace the day together, embrace the knowledge, and let us know how we can help you.
Cool. Thank you so much, Chris, and thanks for joining us today. I'm going to start with you, Patrick, and ask you a question that we get a lot, and I'm sure you get a lot of it too. You see a lot of veterans and their families on almost a daily basis who need capital in order to start a business or continue operations. So tell us what you think the most important thing anyone seeking funding for a business should know before they talk to a lender.
Awesome. A great question. So I'm speaking not only as a business advisor, a certified business advisor, but also as a business owner myself. I own 4 businesses. And so the most important thing that you can do and that anyone can do in preparing for capital is connect with your SBA resource partners. And that's not me sitting up here and putting in a shameless plug for the SBA. That's my real answer to your question. Because the SBA resource partners, and I'll run through the list real quickly. One is the SBDC, or the Small Business Development Centers. They're located on community college campuses and college campuses all across the nation. They maintain relationships with these lenders. And they can literally let you know which lenders you need to be going to based upon your industry. Some lenders love this industry, some lenders love that industry, some lenders love this business, some love that business. And your SBDCs can help you identify that and help you put together your financial package. Your SCORE mentors, there are 11,000 of them nationwide. These are free mentors, people who stand side by side with you, who've been there and done that, and so forth. And they can help you put together your business plan, the financials for your business plan, and everything it is that you need to know and to walk into that lender, quote unquote, lender ready. You don't want to walk into any old lender and not be lender ready. For the Women's Business Center and my office, the Veterans Business Outreach Center, we do the exact same thing, except we focus in those target populations. My office focuses on veterans. Women's Business Center focuses on women. But my point in the end is connect with your resource partner. Go in and see them first. Let them help you put together your financial packet and help to get you lender ready so that it can get you to the right lender.
Excellent, Patrick. That is really good. And don't wait until you run out of money to do it. So now's the time to start thinking about that. So where do you find the resource partners? If you go to sba.gov, there's you'll see towards the top local assistance. You put in your zip code and they pop up. And he mentioned the Small Business Development Centers, SBDC, search for that. Veterans, search especially for the VBOC. There's SCORE, and then there's the Women's Business Center. So, excellent. All righty, let's continue with you, Mike. You're very familiar with business owners who are seeking capital from a lender. Many report it's very difficult for a small business owner to find a lender willing to lend to them. What are the main reasons that a bank may not want to fund a small business?
Well, that's a great question, and I've talked to many small business owners over my 30 years. And I would start that question by saying, let's change it a little bit. Banks want to make you a loan. That's why we're there. We want to make you a loan. Sometimes we cannot. Keep in mind, a bank's primary function is to protect their depositors' money. That's what we have to do. So we have to manage risk. So banks have a risk profile, and we want to fit you in that profile and see how we can make a loan work for you. Along that line, I would kind of echo what he said. Your financial package is very, very important. You should have good financial statements. They should make sense. They should show you're making money or have the potential to make money. Your personal financial standing should be good. You should have good credit. So if you have an X on any one of those, that can exclude you from accessing credit. But I would say this, the banker you're talking to should be having that discussion with you and helping you achieve your goals. They are a trusted advisor. If they're not sitting down with you and telling you how you can get a loan, not just know you can't get a loan, then you need to try another banker because there's a lot of them out there. We should be a resource to you. So, and the other part of that is when you come in for a startup business loan, it's very important that you have a good financial package. You have to really convey to that banker why you're going to be successful. How is that business going to succeed? And I've heard a lot of great ideas in my 30 years as a commercial lender, but a good idea or a great idea without a plan is simply a dream. It doesn't work. So, kind of the proof is in the documentation you provide to your banker, but they should help you work through that process. In fact, if you look out at the SBA table, I've left some packets, not to promote my employer, but just a packet that shows some of the things you need to put into your loan package before you come talk to the banker.
If I could just kind of ad lib on what he just said and what you said as well, don't wait until you need a banker to get a banker, right? And just because you went into a bank and opened up a commercial account does not mean you have a banker. You literally need to go into the bank, open up the account, and then ask, where is the commercial banker? Where is the business banker? And go over and shake hands and say, hey, my name is Patrick Alcorn. I just opened up a new account in here. I don't know if I need anything right now, but I just want to introduce myself to you. Maybe along the way you have some products or some services that you think might be appropriate for my business. So don't wait until you need a banker to get a banker.
Great comment, Patrick. Thank you for that. And I would echo that to say your banker should, again, be a trusted advisor. He should bring you solutions. He should not be just trying to sell your product.
Thank you for that. Excuse me. I do have to say that our lenders, our lenders and our resource partners play well in the sandbox, is how I like to say it. To me, the really community-oriented lenders and all of our resource partners, if they can't help you, they may be able to point you in the right direction and with one of their colleagues that is also in the same field. And so this brings me to you, Chris. You often visit with business owners that just aren't financeable through traditional lenders. What advice do you have for business owners who have unresolved credit issues or who are unable to support repayment ability for additional debt? What's your advice?
Great question, and it's a full-time job for us as a CDFI. I think the theme here today is acquiring knowledge and being proactive. And what you've heard everyone say is that you've got to be prepared. And so part of that is understanding the process. Don't hesitate. There's so many resources. Don't hesitate to get out there, not just Google, but shake hands with some folks today and find out who you can connect with, because we can educate you on what's needed. And things like credit, for instance, it's important to know. I've had so many people say, well, where's the quick fix? Where do I go to just make this thing go away? It's like, well, to a lender, you are your business when you're starting your business. If I see nothing but charge-offs and repossessions, and now, again, there's always a story, and I understand, and we want to sit down and understand someone's life story, but you have to know that you are your business. And so there are times when we've got to sit down and address it at the root, right? And that's not always an immediate fix. And that can be frustrating because it can delay your plan. It can sometimes derail an idea because of timing. And so my advice would be today, if that's something you feel like you may need to address, sit down and get started now. Don't go to the table with the lender and not be prepared there. It's huge. And there's not always, we refer folks to credit repair places all the time. You can try to dispute things, and there's a lot of things you can do. There's a lot of times you may have been done wrong by a credit bureau or a credit agency, but I would sit down and address and look at the root habits and say, hey, how do I present myself as a person? What are my pay habits? How do I live my financial life? Because that's how we see the business until that business has a 10 or 15-year track record that says otherwise. And then to the second part of the question, folks that may not be able to traditionally support repayment for additional debt, it's important, and this is part of the knowledge and understanding how to come to the table prepared. It seems counterintuitive that you come and sit down and say, I am working 18 hours a day to run this business, right? You should see all the work I'm putting in, the sleep that I'm not getting. And then we look at you and say, yeah, but we want you to also have a full-time job just in case this doesn't work out, so we know that you can still repay the loan. But such is the nature of what we've been talking about. Things like risk management for a lender, there's a lot of balancing that we have to do. For us we're a non-bank lender, so for us it's a little different. We don't have a deposit base and such, but we still have to manage our risk. As a small nonprofit, we can hardly afford to take the kind of risk that if 8 out of 10 loans go bad, we don't exist anymore. So we do want to balance that with helping folks achieve their dreams. And so there may be times that you need to realize that, hey, I want to get this thing off the ground, but for the first year, 18 months, 24 months, I may really have to burn the candle at both ends. I may not get a lot of sleep. I may look pretty frazzled, but by golly, I'm going to get this thing going. And then when you know the time is right, and you can look at your financials on paper and you can say, hey, I'm trending in the right direction, there's some stability here. Maybe then you sail the ship and you leave the full-time job behind. But remember, guys, that's part of the process. Is a lot of times you're going to be asked to provide some stable income. It may mean you, it may mean somebody in your family or somebody that you're close with that's willing to go to bat for you. There's a lot of different ways to do it, but I think the theme here, and I'll wrap this up, is understand that that's part of the process. Sit down now, make a plan, be proactive, and be prepared when you sit down at that table.
So, Chris, I think I heard you say don't quit your day job.
Yeah, I have the T-shirt on. I just have the jacket covering it. So yeah.
All right. Well, you dropped an acronym for them. Of course, I work for the government. We kind of specialize in acronyms. CDFI. I believe that is Community Development Financial Institution. And tell us a little bit about a CDFI.
I love this question. This is what I love to do all day long. So we're a CDFI, and we're a non-bank lender. A community development financial institution is something that the U.S. Treasury set up through a charter, I believe, about 30 years ago. And so CDFIs are designed to come into play when maybe a bank can't or isn't able for some reason to lend. So we try to fill that gap between those predatory lenders that are out there and traditional bank lending. And that's done through a lot of different things. So we're partially funded through government grants, private investor and philanthropic donations. And then a lot of times we work with traditional banks to help them satisfy some of their lending requirements through the Community Reinvestment Act and such as that. And what that means for you guys is that sometimes we may be helping a bank put money out there to folks that need it at reasonable interest rates. And so what we do is a little different in that we try to really sit down and take on a little more risk if we can. We try to listen to someone's story. I've got a client right now that battled through cancer and had some credit issues and some different things, but has got a killer idea and has the work ethic and has done everything you could ask of someone. And we're bending over backwards to see if we can't find a way, because you kind of look at this person's business plan and their projections and you feel like, hey, they just need this little boost, that little lift, and it's gonna run. And so that's a lot of what we do. We do things kind of through two avenues. We do small business lending, and we do small business education. Surprisingly, we can provide the education piece for free based on the fact that we do have those government grants to assist. So if you come to us and you're like, hey, I've got no clue how to write this business plan, and I don't know a projection from a projector screen, it's like we're going to sit down with you, and 6 months, a year later, you'd be surprised. If you put the time and the effort in, what you'll have on your hands, and we don't charge a penny for that. And we also don't necessarily expect or require that you'll come get a loan with us. We're there for you if that's what you need, but that's not for everybody. It may be an angel investor that you need. It may be that you're still bootstrapping and doing it with your own funds. So I guess the long answer there is that a CDFI, it can be a lot of different things. It can be affordable housing in a lower socioeconomic area. It can be small business financing for folks that may not be traditionally bankable, like what we do at PeopleFund. So I would encourage you guys to Google it, understand it, and read about it, because it's an amazing resource.
If you were listening carefully, Chris touched on one of the 5 C's that most lenders use, and that's that C called commitment. I'll give you the other 4 C's real quickly, and if I get them wrong, you guys correct me. But the one is cash flow, right? They're looking at your actual financial cash flow statement to know that there's enough cash flow running through the business for you to pay your obligations. In other words, for you to pay on your loan. Commitment, as Chris just mentioned, making sure that you're committed to actually growing this business. And then character. Remember, people do business with people that they like, they know, and they trust. This lender might like you, they might trust you, but they don't quite know you. And your business plan is how they get to know you. So you've got to have a really solid, effective business plan that lets them get to know you. And that's why I mentioned earlier, don't wait until you need a banker to get a banker. Go make sure that you meet and establish that relationship. And then there's collateral, right? You've got to have some skin in the game. Don't ask me for my money and you haven't put any of yours up, right? So make sure you have some skin in the game. And it varies from lender to lender and from product to product and from loan to loan. The great thing about your CDCs and your CDFIs is that they do what's called microloans, right? Those are loans at $50,000 or less. And part of the role that a CDC or CDFI has is they get you ready to go to the big banks, to the Frost banks and the other banks. So you start with a microloan, $50,000 or less, build a relationship. Chris and his team and other CDCs and CDFIs, they work alongside of you, get you ready for the larger loans that you might need at the larger institutions and so forth. And I missed two of the C's. Which two did I miss? I got collateral, I got commitment, I got cash flow, I got character. I'm missing one. Which one am I? Oh, credit. Credit. That's the obvious one, right? I don't know how I missed that one. Your credit score. And it's not just the business credit score, because as a new business, you may not have a credit score yet. Remember, how you do anything is how you do everything. So they're looking at your personal credit score because that tells them how you do everything.
So that brings up an important thing that I want to talk to you about, Mike. Does it hurt a business owner's credit to talk to a banker, a lender?
No, not at all. And I'm going to comment on the C's real quick too. By the way, with your banker, the character comes first. If you don't pass that test, we don't talk any further. So character is so important. But you can come in and talk to your banker. I would encourage you to do so. You're talking about planning. When you submit a loan application to a bank, they are obligated by law to process that application and let you know whether it's a go or it's not a go. And at that point in time, they will pull credit. Credit hits sometime impact your credit score, but if you're not out there having inquiries done multiple times a day, you really don't feel a huge impact. But a credit report's never pulled until you actually submit a formal application, but that is a big part of it.
Off just for a second there. Very, very good answer. So I'll just open this up to the whole panel. Just jump in. So this business plan, how long should it be?
At least 300 pages in every case. No.
I was going to jump in and say there's a lot of folks out there that'll help you with business plans, some for fee and some not, that volunteer time. Don't say anything in 10,000 words you can say in 10. You know, your business plan should be brief, concise, and just make the point. It does not have to be a novel. The one thing your banker doesn't want to do is sift through 50 pages in a business plan, because it's really not necessary most of the time.
And your business plan is a communication tool, so you're actually using it to communicate to the lender or whoever else, maybe a key employer or someone else, as to how you do business. Keep this in mind. There are folks out there who can help you with a business plan, but you need to know your own business plan. I would caution you against going to have a business plan done by anybody else and then trying to take that business plan in and sit down with Mike or Chris, because when they start asking you questions, if you don't know the answers from your own business plan, you've blown it, right? So you really need to, even if you go outside and get a business plan done somewhere else, you need to know your business plan, and including your financials. It's not enough, excuse me, it's not enough that you have a bookkeeper or an accountant who help you put together your financials. You need to know your financials. You need to know the exact amount of money you need, what you're going to use this money for, and how you're going to pay this money back. And that's at the lending institutions, that's with investors, that's with any place that you're going to get capital.
I want to piggyback real quick off of that, because for me, I see it all the time. People are just like, well, what do I need to give for the underwriter? What do they need to see? And it just, my smoke starts coming out of my ears, my nose. It's just like, my buddy and I sat down about 15 years ago, and he's a fairly wealthy individual, so he had some venture capital he wanted to put into an idea. And we swore up and down over a few beers here and there that this idea was going to make it, right? Once we sat down and we mapped it out in a business plan and did some financial projections, it turns out that would have been a bad idea. Had we not taken that time to vet the idea and really work through it, we might not have known that and would have blown some money, would have blown some time, and might have missed pivoting to a different idea or slightly adjusting to do something better. This is your way of working through that idea and knowing it forwards and backwards. And so not just to present to that lender, yeah, we want to know that you know it, but you need to know it. And, with the projections piece, it's just as much. I mean, if you look at those and they look like a foreign language to you, then you've got to go back to the drawing board. You really have to understand those numbers. How did you produce them? How did you get them? Do they make sense? Are they in line with the industry? So, and we're here for you guys. These are the resources that you need. You just got to know how important it is to take advantage of them.
And what Chris just said, how many of you are comfortable with your financials? I mean, you're comfortable with looking at the numbers. It's okay. You can change. Okay, I see. Not many hands going up. This is sort of a little bitty plug. It's not an endorsement. It's not a recommendation. It's just the best practice, right? So I want to clarify with that disclosure up front. Your SBDCs and my office, your Veterans Business Outreach Center, we teach a course called Profit Mastery. And it is a course that really dumbs down the language of your financial statements. We can literally make it really simple for you, the everyday business owner, to look at your financial statement and know exactly how much you need to borrow, know exactly how much you need to pay in the salary for a new employee, know exactly how much money you have available to expand your space or increase your inventory. And all of the answers to those questions come off the financials. It's not you shooting from the hip saying, I want to hire somebody, or we need to add another vehicle. Those answers to those questions come directly off the financials, and you can learn that from your resource partners.
Excellent. And those were two of the resources. SCORE has one, financial statements for non-financial managers. They name it something else from time to time. Frost Bank, I know, goes over to the Women's Business Center, and they do some financial literacy. But Patrick's right. Talking about a financial statement, I mean, let's go have a root canal. I mean, it's just not fun. But if you get the root canal, your tooth doesn't hurt anymore. And if you understand those financial statements, your own, you can see if they really make sense. Because when you sit down with the banker and they look at, oh, well, once I get that money, then I'll make all this money, and those projections may not be real. And I don't know exactly how they do it, but these lenders know what's normal for your industry, and they know what's normal for how many years you've been in business. So you don't want to go it alone. You want to do what Patrick said. You want to get someone coaching you, and they're not going to do it for you, but the resource partners, they have tons of experience, and they can help get you where you need to be, so you can talk about your business in an intelligent way. So excellent from this whole panel.
And Linda, if I could just say real quick, because the theme today is resources. You guys are here to learn about resources. What Patrick and the VBOC does for veterans is so cool. When he told me about the profit mastery thing, I was like giddy and heels were clicking. It's like, because if you don't understand your profit and loss statement, if you don't understand your statement of cash flows, and you look bewildered when someone says, do you have your balance sheet? There's work to be done. And it's so huge to growing and building and scoping your business. And so they do that for veterans. There's so many other things they do. It's a wonderful organization. Frost Bank does so many great things in the community. Their business series, we're getting to be a part of that they do all around the state, and cohort programs like that to educate and teach and help people connect with the resources they need. So understand that these are just 3 of us. There's so many more out there, and there's a lot that probably aren't even here. Start laying that groundwork and looking for them and being proactive and reaching out and planning to talk to them now so you can learn.
Excellent. So now, get your pen out. I want you to write this down. This is how you find out about these programs going on, okay? SBA.gov/TX/Dallas. That will take you to the SBA District Office website, and you will scan down that page and you will see upcoming events. And that's where all of our resource partners, they have the privilege, and it's to all of our benefit, to put their events on our district calendar. So that's where you'll see and connect with what we're talking about right now. How many veterans do we have in the audience? Okay, all right. And then probably if you're not a veteran, you're a family of a veteran. So that is just awesome.
For those of you who didn't serve, thank you for paying your taxes so we could serve.
There you go. To keep this, actually, owning a business is one of the freedoms that we enjoy because of our military. So not every country in the world can you own your own business and land and all of that, and we can do that. So we owe that to a whole group of people and the people that paid to make that happen. So I appreciate that. I try. I think every year I'm trying to pay as much tax as I can. I probably need some CPA help, but it's going to a good cause. So at any rate, we have, I think, just a couple of minutes. Let me check our time here. We've probably got about 10 more minutes. I've got a few more questions, but I'll open it up to the audience. Do we have a question from the audience? Okay, I think I saw yours first. What is yours?
So everybody else can hear the question. They might be recording.
Thank you, Patrick.
I come from a history of auto lending, and when an underwriter's looking at an application, there's a debt-to-income ratio on the cash flow from a business loan. Is there a basic guideline, like in auto lending, if you're at over 45% debt, then you've got to put down a bigger down payment on that car if you want to buy it?
You bet. There
So
is.
is there just a rule of thumb guide on the debt-to-income ratio percentage?
Well, when we're looking at on the consumer side, debt to income becomes more important. When we're looking at the commercial side, generally we're looking at a cash flow coverage. And we don't focus as much on the debt to income. We do look at leverage, but typically if a business can't cover all their debt service, all the monthly payments they have by a ratio of at least 1.25, then you have to be a little uncomfortable with that. So, but you know, we will look at your debt to equity ratio oftentimes on a company, but it's not as meaningful when you're looking at an asset purchase like an automobile.
And to piggyback off that, I think that there's a lot of ratios and things that you'll see in here that might make your head spin and may make you want to hide under a table. But what we just talked about, that cash flow coverage ratio, you may see DSC or DSCR. It's your debt service coverage ratio. And we don't want to get into too much detail, but sitting down with partners and understanding that we have to look at, when you come to us with a startup business, you know, what kind of money do you have now versus your debts? How do you handle your household debts? And now you're trying to take on more. And that ratio that we were talking about, the 1.2, 1.25, that in essence will represent your ability to cover what you've already got, and then also to take on this new debt. And do you have some cushion there? And for government-backed lenders with the SBA, a lot of times there's ratios that they need to see from us so that we can button that loan up and make sure that we get the SBA coverage. For instance, for a nonprofit like us, we want to help so much, but it's so important for us to make sure that that loan is SBA worthy because we need that coverage. We just don't have the means to take on the risk without. So important for you to go in as a borrower understanding how the game is played like that.
Good point, and that's where SBA comes in our loan. If you can get a commercial loan without SBA, go for it. That's the way to go. But we step in when, on that repayment ability, in our programs, we guarantee the lender so that if you default, we make them whole. We don't make you whole, we make them whole. You're still on the hook a little bit with the feds. But that's where, under our loan programs, that term of the loan can be a little longer, which brings down your payment. Also, working capital, it all happens. I remember this from economics. You plan for the long run, but you live in the short run. So you're going to live in what you've got for working capital. And a lot of business owners don't even think about working capital until these bills are due, but that's something to think about so that you have a place that you can go on that. But that's how SBA is involved in the lending. We insure that lender to encourage them to make that loan.
And just to be clear, most of you may or may not already know this, but the SBA is not the lender, except in a disaster scenario. The SBA is not the lender. So you're actually qualifying for the capital with the lender, and the SBA comes in and guarantees it and so forth. So just keep that in mind. You still got to qualify and still got to go through all the parameters with the lender.
And it's repayment and credit is what is so key, because you can't fake either one of those. You have to have that, or we look at should it go to default? We look at what they write up about the credit and why they thought your credit was okay, and also your repayment. And Mike, I think you had something to add to that.
I'm going to say, when you talk to your lender, your prospective lender, make sure they do SBA loans. Make sure they understand SBA loans. Some lenders don't want to touch them, and it's one of the best programs in this country. Just to give you an example, a practical example, I had a company many years ago, and they were pretty leveraged. They had too much debt. They were having trouble repaying it. But if they rolled it all into one note and stretched out the repayment, it made it work for them. It made them survive. And that could have only been done with an SBA guarantee, and we did it. That company survived. They flourish today. They're a great company. But that's how you think outside of the box and make things work. And the SBA is a big part of that.
That goes back to Patrick's point earlier, is to establish that bank relationship with a qualified banker that can help you think proactively like that and can come up with good solutions that may save you and your business. So
I think we had one question right here on the first row. I wanted to say the women in green, but I think there's two women in green right there. So you're the forest green, I think. So go ahead.
So Patrick, my question is actually for you. So you work with veterans and military, I guess people that have enlisted in military. If, let's say, you yourself doesn't have a military affiliation, would you guys offer services to businesses that the main person in the business doesn't have an affiliation with the military, but maybe a partner does? And if so, how does that work?
So to be clear, the Veterans Business Outreach Center is a program funded by the U.S. Small Business Administration, and we're funded specifically to provide technical assistance, education, and training to military-connected entrepreneurs. Typically, we're looking at we're having our conversations and our interaction with the individual who has the military connection. So it's the active duty, the veteran, the military spouse, and the dependent. You may have an employee or a partner within your business. If they've got 51% ownership, that can be considered a veteran-owned business. If they don't have 51% ownership, they can come in individually and have a conversation with us, and you can be at the table in that conversation. But the veteran or the military-connected person has to be in the conversation with us.
Anyone else? Do we have another? Okay, the man in green back here seems to be the color today. It's the color of money, isn't it? I think that was a movie.
So my question is, what about entrepreneurs like myself who are looking for investors or grants based on ideas that we know will work and have been confirmed to work, but we're just looking for some money to make the idea work with a business plan and other things we have in place? But is there a list out there of people who like to talk to people like us?
There are venture capitalists out there. We actually license some, but Patrick, I think, has something to add to your question.
As an SBA resource partner, I'm very familiar with a lot of the SBA resources and the government resources. I'm trying to get by this speaker so I don't have feedback. But a quick answer to your question is the federal government has an investor portal as well. So if you go to sba.gov on that particular website, across the top of the menu screen, you can click on funding. And under funding, there's a link for, I think it's called CBI.
SBIC.
SBIC. So you can click on that, create a profile, and that profile will match you up with investors. You can do the same thing on the lender side. So they have a lender match tool, and you can go to sba.gov, click on the funding link at the top, create a profile, and it will match you up with lenders and so forth.
And,
but go ahead.
And that's fairly new. You're right.
You're right.
We're
So
really
fairly
opening that up.
In fact, I think there's a webinar today or tomorrow, I think it is. There's a webinar that's being put out by that particular organization who does investment capital. So the new SBA administrator came on and made that one of her initiatives to not only do debt capital, which is lending, but to actually do equity capital. So she's got a whole new department within the SBA that just does equity investing and so forth. But you're in a metroplex here in Dallas-Fort Worth. Equity capital is ridiculous here in DFW. I mean, it's available in Fort Worth. You've got TechStarts, and you've got all the folks over
Cowtown
there.
Angels is
Cowtown
one.
Angels. I mean, you've got all type of angel investors and other type of equity capital on the Fort Worth side, and then the same thing over here on the Dallas side and so forth. And it may sound simple, but in my head it just says, Google's amazing, right? just Google investment capital in your area and pull up that list and or go to the SBA website.
And it's a lot of networking when it comes to investment capital. The venture capitalists have a sweet spot. Bankers do too. But there's certain things that venture capitalists want to fund. It's things that they're real familiar with. If you watch Shark Tank, those are venture capitalists. And you can see someone will come in and pitch something, and they'll kind of pitch it around themselves, who really kind of specializes in that and has experience and all of that. But it's a lot of networking involved in that, and you can start even with SCORE talking about that, angel funders, that kind of thing. But there's a lot of pitch competitions in the area. This is an area that's real high on tech. Wherever you see high tech, those are some of the things that venture capitalists are especially drawn to. But I'd start your networking and do what Patrick was talking about on our website. That is so new. You're going to have to show me exactly where it is. But I know that we were really starting to focus on that. But that's for when you are not quite ready to go to market. You may have tested the market a little bit, but you need some cash to get going. And Mr. Wonderful on the Shark Tank was talking about what he looks for is he wants to find a fire that he can pour gas on, to have a huge fire. So that's kind of the thing that they're looking for. So at any rate, but good to bring that up.
Hey, Linda, real quickly, if you also would, there's a lot of colleges in North Texas, right? And over at UTA, we actually had Mr. Wonderful about 2 years ago. We had Damon John a year ago, so forth. And we get these folks that come in and they do presentations, so forth. So connect with your local university and find out who they have coming in speaking in various departments and special programs that they're having at the university. Is an easy way to get some of that simple knowledge and that information. And
that networking, and that was excellent that you brought that up. I was at a women's event, University of Texas over there in Dallas had one. It was a women's event actually and they had angel funders that were women, funding women kind of businesses, but they had an entrepreneurial section of their campus, and that's excellent. That's right. I remember when Mr. Wonderful came to Arlington, and that was incredible. So this is really a hotbed for angel investors and that kind of thing. But it's got to be, kind of the right thing. You have to hit on the right person that is a venture capitalist or has a group. So, any other questions? We have a couple of minutes. The lady in purple.
And I'll run out. Linda, I wanted to jump in real quick. And so you can put yourself in front of the right people. But if you don't know what to say and you're not ready, I get to do a lot of business or pitch plan competitions, and it's a lot of fun. But and make sure I can be heard here. It's a lot of fun to see that. But if you don't have a 30-second, a 1 minute, a 3 minute, and a 5 minute, you get in the elevator. You don't know what kind of money is in the pockets of that person in the elevator. if it's Mr. Wonderful, you need to be ready to sell it, and you need to be ready to sell it quickly and efficiently. So part of knowing your business plan and knowing your business is exactly that. It's you better have that pulse on it so that if you get that opportunity with that person that could be that person for you, take it. Don't miss it. So let me see if I can.
So I think that Chris would be a good one to test your idea out on. Actually test out your elevator speech on.
I love
on
those.
Chris.
And was there a question?
We had the lady in purple right here.
Oh, okay. I walked right past you.
You know, I guess if you didn't wear a color today, I guess I can't see that. But go ahead. What's your question?
So I'm a nonprofit organization, and I'm disabled as well. I hire a lot of people that have disabilities or have challenges getting other jobs. So we work at 9 different stadiums. What kind of funding is available for nonprofit organizations? Because I always just go to work at stadiums, and I never kind of got funding.
We don't have a lot of grants at SBA, and those that we have go to programs like the VBOT that help other businesses. We are we actually, there is a place that you can go, usaspending.gov or grants.gov, to look up government kind of grants. Our loan programs are for profits, but these lenders that are SBA lenders, they have a lot of other programs too that they may be able to help you with. I think Mike's got an idea here.
Yeah, you know, banks make loans to nonprofits all the time. Some banks have special divisions that just handle nonprofits. Now, the other side of that is banks can be very philanthropic with their contributions, and they like to help out boots on the ground organizations in the community. And so you have a lot of networking you can be done with your local bank, not only from a granting or a gift perspective, but actually from a loan perspective as well. And there's lots of organizations out there that grant money to nonprofits. The field is wide open. You know, you can apply for grants from a number of private foundations. So there's dollars out there to access. It takes a little work to get them. But there again, talk with your banker about that and see if he can send you directions that could help you.
And get a banker. I think that's been a message throughout. We'll take one more, but we are right at the end.
Real quick on that, CDFIs like us, we do a lot of lending to nonprofits. It's not always perfect, it's not always easy, but we try to work with term loans, maybe even a flexible line of credit. And we can't always directly give the grant. We do have some of our own internal programs, or we connect with municipal partners even, or organizations like sports teams and things. But we can also connect you with people. We usually have boots to the ground and have some knowledge of, hey, we don't have a grant, but try going and applying for this with those folks. So check into CDFIs if you're in a nonprofit. It might help. So
Don't forget, just because you're a nonprofit doesn't mean you don't need to know your numbers, right? Yeah, so as a nonprofit, you need to know your numbers as well and know what it is that you're asking for, how this money's going to be used, and how this money's going to be paid back.
Yes, I'm asking about Dun & Bradstreet for my company. Does that credit matter?
Yes, it does. I'll let, Chris was nodding his head the most on that, so I'll let Chris answer that.
And I think, Mike, it's probably a good question for you to answer as well. It absolutely does matter. You know, the business credit system is still more fledgling, and so it's not as tightly controlled, regulated, or as easy to predict, and there's multiple scoring models, but having a DUNS number for your small business, absolutely. I think the big thing there for me, and you can speak to this, is knowing who you deal with. Like, if you deal with a certain number of suppliers, how are they checking things? How is it beneficial to you there? I think that's a big part of it, is where is it advantageous to you? And I'll let Mike jump in on some of that.
I would just say what he said. But no, it is important. It is fledgling. We probably put more weight on your personal credit for a small business than we do the D&B report. But I would tell any business owner to review it, to try to keep it as accurate as possible. Be sure it's accurate, because I think it will become more important in the future.
Now, I'll say this, I was a loan officer in our disaster loan program for 12 years, and for the business loans, we did individual and family loans too, for people who'd been through a declared disaster. But what we looked at on Dun & Bradstreet, and it may be different today of what we look at, but we looked at what's called a paydex score. And that is how promptly you pay your vendors. And so when you get a bill from your vendor, the best thing, well, number one, you should be signed up with D&B so you can start building your commercial credit. And you should always pay those debts on time. And when you see that it's only 1% if you pay it after 30 days, but before 60 or whatever, that's very misleading. That's not a 1% loan. That's compounded monthly, if not weekly, if not daily. So pay your your vendors on time. And I think I don't think he's going to cut my neck, but I think that this is the end.
Thank you all for being here today.